Sinjuri, nsemmilkom nilqakom għal edizzjoni oħra ta' Flusek. Illum il-programm se jkun iddedikata l-HSBC Bank Malta PLC. Fl-ewwel ġimgħa ta' Wissu il-bank ħabbar il-riżultati finanzjarji tiegħu għall-ewwel 6 xhur tas-sena 2019 u għalhekk magħna llum għandna lis-Sur Andy Bean, il-kap eżekuttiv tal-HSBC Bank Malta PLC u lil Charlotte Cilja, Chief Accounting Officer tal-istess bank sabiex niddiskutu dawn ir-riżultati flimkien. Andy, Charlotte, welcome you to Flusek. So, as I was explaining to the viewers just now in my introduction, I was explaining in Maltese that the bank announced its financial results for the first 6 months of 2019, and today we're going to discuss these results together. So, to go to the first question, I'll start with you, Andy. HSBC Bank Malta announced a profit before tax of 20.9 million for the first 6 months of 2019, an increase of 4.8 million when compared to the same period in the previous year. Are you happy with these results?
These are a good set of results for us, and they really reflect the progress we've made on our strategy. We've spent the past 2 or 3 years repositioning the bank for the next phase of its journey, raising our risk management standards, preparing some new solutions for our customers. So we're really pleased to see the progress that's now coming through. I think it is fair to say we did benefit in the first half of the year from a credit risk loss that we saw last year that didn't repeat this year. But again, I think that reflects the high standards that we run the bank to. And now these results, I think, are signalling what we want to do in the future, which is begin to grow the bank again by focusing on our customers. The high standards that we've built give us a good platform to do that, and we want to now be the leading bank for customers in financial services in Malta.
Banks are facing a challenge at the moment, low interest rates, which are not going away anytime soon. And HSBC has seen, in fact, a slight decrease in net interest income. How is the bank dealing with this challenge?
Well, it's really an unprecedented situation that interest rates are not only negative, but seem to be structurally so, that this looks to be a long-term reality. Actually, I feel most for customers, people that have worked hard and saved, that traditionally would put their money in a bank deposit and expect to receive a decent return. And the reality with EU-wide interest rates being negative is that customers are receiving next to no deposits, interest on the deposits. The reality for banks and shareholders in banks is even worse, that negative interest rates means that it is a loss-making proposition to carry deposits in banks. It's something I've never seen before in my career. So it's a strange answer to your question, but it is the correct one, that reducing our deposits is the best thing that we can do commercially at this point in time. We've got more deposits than we can productively deploy in the business. So we were, strange to say it, pleased that our deposits went down in the first half of the year.
Charlotte, fee income was also slightly down. What are the bank's plans so that such income is increased going forward?
Yes. While fees have decreased compared to the same period last year, we've actually seen a marginal increase when you look at the last 6 months of 2018. Okay. While we're growing, we expect to increase our fee income through our core business, mainly the retail banking as well as the commercial banking. Also, being the key global bank on the island, we see opportunity from our investment, from our international advantage, by offering multinational services and solutions to our customers, mainly trade finance as well as foreign exchange.
Okay. And the bank reported net income from financial instruments of insurance operations of 35 million. Can you explain what this represents?
Yes, we offer a number of insurance products, such as life insurance, as well as policies that our customers use as investment products. The premiums we earn from such policies, we invest them in diversified portfolios, investment portfolios, which are mainly equity as well as debt securities. The income you're referring to of 35 million relates to the income that we earn by placing the money received from the premiums in the investment portfolios.
Okay.
Having said that, we obviously have claims that we need to pay to our customers, as well as incurring other fees, such as reinsurance fees. So in reality, the net income from the insurance business was 5.4 million in the first 6 months, rather than obviously the gross amount of 35 million.
Okay. And total operating expenses fell by 1.3 million. How is the bank managing to control costs? It's always a challenge controlling costs, but
We've seen strong progress on cost. We actually decreased costs by 2% while absorbing salary inflation as well as the cost of a new employee pension scheme. We managed to achieve this by continually looking at cost management. We've also launched a number of initiatives whereby we are trying to streamline our cost base, for example, by outsourcing as well as process optimization. We as HSBC are committed to make sure that we keep as much as low as possible our cost-income ratio in the future.
okay. Andrew, a question for you. Net loans and advances to customers were slightly up when compared to the previous 6 months. Is this an indication that your strategy is starting to have a positive impact on the business?
We're really clear on what we want to do. We want to be a great bank for customers, both our retail customers and our commercial. And as we're coming out of this phase of risk management, we're seeing some really strong momentum in some parts of the business. So our retail bank that serves individuals is doing brilliantly well. Our home loans business had a fantastic first half of the year. We've seen record numbers of new customers joining us. Our new account opening process, for example, with just one signature, customers now walk away with their account ready and working with their card in their hand when they do the first appointment. So these new propositions have really supported strong momentum in the retail business, and we've seen that come through in the numbers, which is really encouraging. In the commercial business, we've restructured that quite significantly to prepare it for the risk landscape that we see ahead. And the objective in the first half of the year was to stabilise the business. And we saw that the loans and advances just ticked up very slightly compared to the end of the year. And I think the outlook is more difficult in that part of the market, but we still remain confident over time that we can grow the commercial business too. So we are looking to see that build back, but I think that will be a slower and longer process than in the retail bank.
And you'll stop here for a few minutes. Namlu waqfa qasira għal-riklami ibqgħu magħna. Nilqakom lura għal Flusek, infakkarkom li qed niddiskutu r-riżultati finanzjarji tal-ewwel 6 xhur tal-2019 tal-HSBC Bank Malta PLC flimkien ma' Sur Andrew Bean, kap eżekuttiv tal-HSBC Bank Malta PLC, u ma' Charlotte Cilja, Chief Accounting Officer tal-istess bank. Andy, back to questions. The bank reported that deposits are slightly down. Is this positive for the bank given negative interest rates, and are you being more selective on deposit taking? You already mentioned this earlier.
It is positive. As I said before, and I would repeat, for us, I'm always thoughtful for customers, and I think it's deeply frustrating for customers that work hard and save hard, that with negative interest rates, the reality is that banks are not going to be able to pay high interest rates on savings accounts, because when you take those deposits into the bank business model, they really become loss-making in a negative interest rate environment, because we can't invest them ourselves. So for us, we are being selective. We're pleased the deposit book went down a little bit. We've got more deposits than we need. So I think we're in a good position from that perspective. We've also taken some steps in what we would call the investment part of the bank, where we invest the surplus deposits. As we've got quite a lot of them, we've looked for some new opportunities, and we've seen some good progress in what we would call corporate centre in our financial statements, which is really investment income and coming from the deposit book. But the general outlook for the banking sector in terms of the value of deposits while interest rates are negative in the EU, it's going to be difficult.
Charlotte, one for you. The bank continues to have a strong capital position. Why is this so important in today's environment?
In today's world, it's very important. It is important from two aspects. First of all, there are increased regulatory requirements, as well as to enable us to deliver business growth. In terms of the regulatory requirements, the new rules on non-performing loans, for example, require us to hold capital against aged non-performing facilities, even if these are 100% secured or even more by property. So obviously this meant an increase in our capital requirements for non-performing loans. It is also worth mentioning that we recently launched a 250 million lending fund for Maltese businesses to be able to succeed internationally. Unless you have a strong capital base, you're not able to do such projects. So yes, having a strong capital base at this point in time for us and in the current regulatory regime is very important.
Andy, the dividend payout was retained at 30%. This has gone down well with shareholders. Is the board of directors likely to retain such a dividend payout or maybe increase it if regulatory changes come into effect?
Look, I can't make a forward-looking statement on the outlook. What I will talk about is the general strategy and focus that the board has. And we really think carefully about what value can we create, particularly for our local shareholders. And the focus is to create a bank business model that can generate a sustainable dividend flow for them. How do you do that? Actually, it touches on what Charlotte just said. You've got to have extremely high operating standards. You've got to be compliant with all the rules and regulations. You've got to have plenty of capital. When you've got that, then you've got the capacity to turn the profit that you generate into profit for shareholders. In due course, I think there's scope actually potentially, depending on the circumstances at the time, for us to look more favourably even on the dividend. Charlotte again was talking about the impact of the non-performing loan rules, and we've been talking with the government and the industry that if there was some sensible reform, for example, to corporate insolvency practice, that would put a stop to what is quite an illogical situation at the moment, that fully secured loans are also having to have capital put aside, and that capital could be given to shareholders as dividends, for example, simply because the legal process is too slow. So we need to see some action there. That type of thing could make it a more favourable outlook potentially for investors for dividends. So we can never say exactly what the future will look like, but I think for our investors, a reason to believe in HSBC is because we've got very high standards, and without high standards, there'll be no dividend. It's as simple as that.
Andy, we often hear comments that the local economy growth will not persist and that there could be a property bubble. Are these concerns shared by HSBC?
Well, I think if you step back from it and look more broadly, firstly, the fact that the economy has performed well is something to be welcomed. And if we look at the various reports that continue to come from credit rating agencies, the outlook is favourable also. You know, the interesting thing from a bank perspective, you have to look really longer term as well. What does a full economic cycle look like? So we remain confident but thoughtful and selective in where we focus as a business in the economy. So we have been focused, for example, on the home loans market. So we think the residential property sector is still got strong fundamentals. But we're conservative, and we welcome, for instance, the action the central bank has taken to ensure there is conservative underwriting criteria in banks when they're making home loans. For HSBC, there's really minimal to no impact from that because we're already a responsible provider of finance. We don't lend customers more than they can afford. I do think there are some parts of the market which would warrant some cooling. We only need to look around and see the number of cranes as we drive around the country. It is important that development is sustainable, that it's of a high quality, and that it has a suitable longevity based on the cost of building these assets. So if you look at our results, we are very cautious with a longer term view on the corporate real estate sector. History has shown that that's mainly where banks incur bad debts through the economic cycle. So I think from my perspective, being underweight on that sector at the top of the economic cycle is absolutely the right place to be. Sometimes it's easy to make money in banking in the short term, but my job for our shareholders is to protect their value and interest for the longer term. So the property market, I think there are areas that require more focus, but there are also some strong fundamentals in other parts of the market where we can be confident and continue to lend prudently.
We are actually hearing a lot now about the possibility of a global recession. What are the views of HSBC and what impact could this have on banks globally?
Well, I think, as ever, the geopolitical landscape continues to be complex. We see the tensions between different regimes, the issues on trade at the moment, for instance. We talked about before the macroeconomic consequences in Europe of having long-term low interest rates. So there are always uncertainties out there, but in my experience, good businesses find opportunity in uncertainty. And from an HSBC perspective, the fact that we've completed our risk management strategy means that we, I think, are in a strong position to find good opportunities to support the economy, to support businesses, to support individual customers, and to create sensible value for our shareholders and to keep generating that dividend for the long term. So yes, of course, we're thoughtful, and you can never say that there are not risks that need to be managed judiciously. But I think as we look to the future, we're confident in what we can do with our bank.
What should shareholders expect in the future from HSBC?
Well, I think there's an interesting point of reflection for investors in the banking sector. What should you be looking for? And this is a highly regulated sector, and in today's world, the capacity of a bank to generate a dividend is entirely anchored on the quality of its risk management capability and the confidence of its regulators. So the questions I would be asking banks as investors is not only tell me what's your return on equity, what's your earnings profile, show me your risk management standards. How are you managing financial crime, anti-money laundering risks? How much cost, how much investment, what standards have you got in this area? In addition to the traditional risk management skills of credit risk, which I think is pretty well understood. So from an HSBC perspective, what I think we can say is those standards, high standards, are a signature for what our brand stands for. I'm exceptionally proud of my colleagues and the work that they've done to get us in a strong position. And now we want to work with customers, particularly in the business community, that I think will increasingly see that working with a bank that meets things like the 5th Anti-Money Laundering Directive already of the EU can give them confidence when they're trading internationally. So, for instance, 80% of world trade is in dollars. And I think for Malta's key businesses, they're going to be looking at a bank like HSBC and saying, that is a partner that we can have confidence in for the long term to help us grow our business. So these are the type of things that investors need to be thinking about, because it would be easy to grow our profits on a foundation of low standards, but the consequence would be very simple. We would pay no dividend, and the outlook, I think, would start to become quite negative. So in banking, the art is not just the quantum, it's the quality of the profitability, and we're really focused on generating a high quality of profits that we can grow steadily and sustainably over time.
Thank you very much, Andrew. We'll stop here today. Thank you as well, Charlotte. Thank you for accepting our invitation. I'm sure that the shareholders watching and our viewers have really appreciated this. Thank you for accepting our invitation once again. Bekk wasanna fit-tmiem edizzjoni oħra ta' Flusek. Minnaħa tiegħi nixtieq nirringrazzja lil New Age Media, l-producers tal-programm, nirringrazzja lil crew tekniku ta' Net Television, nirringrazzja l-sponsors tiegħi u fuq kollox nirringrazzja lilkom tal-li segwejtuna. Nagħmel appuntament magħkom għal ġimgħa d-dieħla insemmilkom.